Welcome to the Two Wealth Show, a show that shares how you can create real wealth for you and your family. I'm one of your hosts, Justin Bogard, and my co-host is Elizabeth Sickles, aka Super E. I am a real estate note investor, specializing in performing residential real estate debt. I find the deals, acquire them for my own portfolio, as well as educate investors while walking them through the process of owning a real estate note. My co-host Super E, a real estate investor, specializing in short-term rentals and the management of them. She connects investors with short-term tenants and manages everything in between. Our show is sponsored by PATHNOTES and Elizabeth MAORA. You can find out more information by visiting our websites at brightpathnotes.com and elizabethmaora.com.
Hello, everybody. I am Elizabeth with Elizabeth MAORA, and this is episode number 17, and I am here with my co-host.
Woohoo! Hi, everybody. Justin Bogard from PATHNOTES, and I am the other co-host on the Two Wealth Show. Wow, we got 17 episodes in already, huh?
It's crazy. Time flies.
It does. It does. Those of you watching this video, you're probably checking out my new digs here. So this is the new office that I'm moving into. So actually, I have a confession to make. It's actually part of our remodel that we're doing at the house that we bought. So this is actually a shed that I converted into an office, and then the other half of it's actually a workshop. So don't ask me to build anything for you. It won't be square, but it is something I like to tinker with, is woodworking. So.
That's awesome. And for our audio listeners, I have to say that, Justin, your shirt does look a little bit big right now.
Oh, it does. Well, I have lost a little bit of weight. So a few weeks ago, Vicki and I got asked to be part of a weight loss challenge. And so, of course, being the competitive people that we are, we signed up for it. And I think we're about 5 or 6 weeks into it. And I've lost almost 10 pounds right now. So,
congratulations.
Yeah, thanks for noticing. I can't believe you noticed it on a camera.
Yes.
I guess I must have filled out my shirts a lot more before.
Well, I noticed that kind of stuff. So, but I think it's really cool too, Justin, because most of the time people make those resolutions at the beginning of the year, and we're almost ready for Q4. I mean, October 1st is the start of fourth quarter. So congratulations.
A little late to the game, but never too late to lose a few pounds, right? Just in time for Turkey Day.
That's right.
I'm prepping for Turkey Day. I got my Turkey Day sweatpants ready to go. They're already stretched out enough. So that's happening. Yeah, it's been interesting. So I never really worked out during this weight loss challenge. What I tried to do is control my portions. And so by controlling my portions, I've been able to slowly lose like a pound or sometimes 2 pounds a week. And so it's been kind of nice. So I am changing my diet as best that I can, because I do like some foods. I just can't get over it because they taste so good. But I have had some salads and stuff. Yes, I've been as behaved as I can. But Vicki tells me, she's like, you don't eat at night anymore like you used to. And I think that's probably contributed a big part of it, So, but I didn't realize I needed to lose a few lbs until we started doing this weight loss challenge. So I'm glad I did it. But thanks for noticing. So what's new with you?
Sorry, I was just going to ask what your goal is. Are you almost at your goal?
My goal was 10 pounds. I thought 10 pounds was reasonable. I could do it. I actually was going to try and do some workouts and stuff. And, I got to hold myself accountable for the next challenge. So I'll make the next challenge to just be starting to work out. So I'll just kind of got my portions under control now. And so the next step will be for start doing the workouts again.
Congratulations.
Thanks.
One step at a time.
So what's new with you?
Gosh, we have a lot of things. We're running now $100,000 project for complete rehab. We're down to the studs for some clients out of Washington, D.C. We're expanding to the state of Washington in Q1 next year. And I'm bidding on 30 units to clean for the cleaning business that are short-term rentals. So
30 units?
Yes.
Oh, wow.
So yes, which this is just why like it pays, even if you're not a networker. I met this guy. I was at a technology networking event having a conversation with another guy, and this lady said, "Hey, I didn't mean to eavesdrop, but I heard you say XYZ." And she's like, "Do you know this person?" And I said, "No, I've never heard of them." I sent him a message on LinkedIn. We had lunch. This was a year ago, actually, and we've kept in contact. And he has a totally different model than I do.
Okay.
But yeah, we have kind of our preliminary quote ready, and we're meeting with him next week to go over it. So
Fantastic.
kind of crazy.
And what's the name of the business again?
It's Elizabeth MAORA Cleaning.
Elizabeth MAORA Cleaning.
Yes.
Owned by Elizabeth MAORA.
That's right. It's a
Ran
DBA.
by Elizabeth MAORA.
That's right.
Yeah.
That's exactly
That's
right.
awesome. That's big news. Congratulations. I know that we talked about that before, how that was something new that you were starting. So it sounds great. Like it's rolling. Sounds like better than you thought it would from the beginning. So that's great. Congratulations.
Thank you. Thank you.
Yeah.
It's definitely been a lot of work, but the hard work pays off. So keep the course if you're in the middle of something.
Yeah.
Or at the beginning of it as well.
That's right. Well, you didn't have to fail. You just moved forward. I usually just fail forward.
Well, I made a lot of mistakes in the last couple of months, but I'm learning. That's for sure.
Good. Well, Super E, what's the big news that's going on right now?
So the thing that's affecting all real estate investors, and you're going to, we talked about it on one of our last episodes, is that you're going to be hearing housing providers as well. So what's affecting us as, I'm just going to go ahead and use the term real estate investors, is the moratorium that the CDC came out with last week, saying that it was illegal to evict any tenants through the end of this year. So there are some, and this is federal, so this is throughout all states in the United States. And there are a couple of reasons why, even if you might be thinking, well, I'm not a landlord, I'm a note investor, or I do flips. But the issue is that because the CDC does not have the authority to do this, you kind of wonder, well, okay, what else are they going to do? What else are they going to ban? What are they going to make mandated? So that's why it's a huge concern, and should be a big concern to everybody.
Absolutely. So just for clarity, the CDC is the Center Disease Control.
Correct. Yes.
This government body put a moratorium on evictions, the Center for Disease Control. This is definitely odd. And I agree with you. I don't think they really have the authority to do that. And I believe you are taking this to the state, right? For our state?
That's right. So and this is one of the reasons why I'd like to encourage everybody, no matter what state you're in or where you're investing, is to be involved with your RIAs. So with your Real Estate Investors Association. In Indiana, we're only one of 5 states that have a statewide RIA, so we're really fortunate here. And so our attorney, Jeff Jinks, he filed a lawsuit in July saying that the eviction ban that our Governor Holcomb, put in place was unconstitutional. And so that actually, the ban was lifted. August 14th was the day for that, but then this ban from the CDC came out. So we've been doing a lot of fundraising for any type of modifications that we need to make for the lawsuit, and then also for any type of further lawsuits and especially the lobbying that we're going to need to do. So, and one of the things, just so you know, that we've done is, there's so much negativity with everything going on, and part of the problem is that there is a place called the Eviction Lab, and they're funded by Bill and Melinda Gates Foundation. They're funded by Facebook. And the issue with this is that they have numbers that are completely inaccurate. Okay. So there was just a story in the Indiana Star Indianapolis Star last week, which is our local newspaper here, that there could be up to 34,000 evictions in the state of Indiana. The numbers don't even add up for that. So, and then about 2 weeks ago, there was a story that Marion County was going to have a record number of evictions. And when we did the math, the only thing we would have maybe a 4% eviction rate in Marion County, which was much lower than normal eviction rates. So with all of this, misinformation out there, we've started a campaign, a really positive campaign called I Love My Landlord.
Nice.
So just want to give you all, it's pretty fun. And even, I own my personal house, but I have one in my front yard. And one of my neighbors commented that it was nice to see a nice sign with everything going on.
Absolutely.
And this was a neighbor that I actually just met 2 weeks ago. So that was pretty cool that she noticed.
Absolutely. So something that you mentioned at the beginning of your lead-in about the CDC was how it can affect note investors. And people might be wondering, well, if you're the bank, how does that make sense with, a moratorium on evictions? Well, some of us that own notes, the borrower is actually the landlord, right? So if they're the landlord and they have a tenant in their property and a tenant's not paying because of COVID related things and they get that moratorium, then guess who else is not getting paid? The bank, right? Which is us, the note investor. So that's how it can get affected for the note investing side as well. So I'm not sure, I haven't looked in our portfolio to see which ones are rentals that we have notes on as well. I believe we do have a couple, but that's how it can be affected. So it is a little odd for the CDC to come out and say that they're going to put a moratorium on it. And I think we all get it, right? What they're trying to do, they want to protect, the people that are in that situation so that they aren't kicked to the streets. And, landlords have a bad name to begin with, right, Elizabeth?
That's right.
Most people frown upon landlords and then look at them as the bad person. And there are definitely some bad eggs out there. And just like in any real estate investing group, we've all heard stories about certain investment companies, investment groups, and they just take advantage of people and they use Ponzi schemes and stuff like that. And at the end of the day, there are bad note investing people as well. But it's not everybody, right? It's a small group of people that are a cancer for all of us that give us a bad name. And so I like the slogan, I love my landlord.
And I would encourage you. So I had, because we manage traditional rentals also. So two of my residents also, they did little videos for us.
Mm-hmm.
Saying why they love living in our properties. So we're going to be posting that. Actually, that starts tomorrow. And so that's why we're creating our own hashtags. So if you do live in the state of Indiana and you have residents and or tenants, however you refer to them, we'd love to have your story. So you're welcome to send it to me because we want this really positive campaign. And so to get the public on our side, and then we're going to hit them with, okay, well, these are the actual numbers of, maybe there could be a 4% eviction rate. So just to go at it at a totally different angle.
Absolutely. What is that hashtag again?
I love my landlord.
So hashtag I love my landlord on any social media account, right?
Yes.
Awesome.
Yes.
And then if they want to send you the videos and stuff that you mentioned, where would you want them to send that to?
You can send it directly to my email, which is elizabeth@elizabethmaora.com. And we would love them. So, and what I asked my residents, I said, hey, if you want to do just a written statement, a couple sentences, or if you want to do video, and they both were like, no, we want to do video. So, and the one, she's kind of shy, but she did a great little video for us.
Yeah. And any little bit helps. It's similar to some of the focuses on CDC for this episode, but for seller financing, there always is a push to be able to create seller financing so that people like us can lend to other people and not have to have so much regulation on top of us to be able to provide affordable home ownership. And so that's one of the campaigns is that we're also pushing for seller financing is to have somebody with, a sign in their yard or have them hold up a sign to say, I got my home because of seller financing, so that the politicians can see that. And so they know that their constituents are the ones that are voting for them. And they're the ones that need the help, because we all know the banking system, it's tough to get loans under, $80,000 for your primary residence, right? Because they just don't like to lend below that. So I'm glad to see that there is a campaign for that side of the business too, because like you just led into, the CDC has put a moratorium on this stuff, and it's just so odd to think about what is going on as it relates to this virus that came to the United States. I mean, it baffles me where we started in February, not knowing it was going to come over. Well, I think we knew it was going to come over here, but I don't think we knew the magnitude of what this was going to lay out. So looking back at 2020, once we get to 2021, I think we're gonna learn a lot from this past year. But I love my landlord. I think that's a great title for the show.
It is. And then so we're selling these yard signs as a fundraiser for Indiana State RIA. And then our next set of yard signs are going to be, I love my housing provider. Just,
Ooh.
To go along, right? Just softening our image as real estate investors.
Absolutely. I like that.
So there's definitely, there's a plan.
So where can someone buy these yard signs?
You can go right to our website, which is indianastateria.club. And we would be happy, and we ship them also. So they're $20 if you are able to pick them up, and they're $30, and we'll ship them anywhere in the US, anywhere in the world. Actually, we'd be happy to send them internationally and really get the word out. But our big thing is that, again, if you're saying, oh, well, I don't have to worry about that, but whoever thought that the CDC would come out with this moratorium? So I hope that, I really want our listeners to be thinking about, whoa, okay, well, this has happened. So what else could happen, and what can we do to stay ahead of it? So right now we're playing defense, but we're working so that we can play offense and have a really good voice with the media in housing providers for no matter what you're investing in.
Absolutely. And thanks for putting all that together. I know you are the president of our Indiana State RIA group, so thanks for putting the initiative together and moving forward with this. And getting Jeff Jinks involved. Jeff is a great attorney. Hopefully we can get Jeff on our show soon.
Yes, we, so he was supposed to be on our episode, but I'll tell you, we had an emergency, or not, it wasn't an emergency, but he had to go before the court on this lawsuit. And it was kind of a last minute, so this process has been really interesting for him too. So everybody's learning a lot of different things right now.
Yeah. We got all these spinning plates.
That's right.
All right, Elizabeth. So what else you got going on?
Well, I think also one of the things, just to help our listeners and our viewers, is that we are almost to Q4.
That's right.
So fourth quarter, which October 1st starts the fourth quarter. And, just kind of we want to encourage you all to think about your goals, both professionally and personally. I mean, Justin's already ahead of his weight loss goal. So I started a pretty major detox actually this weekend, because I have a birthday coming up and I always want to be at a certain weight for my birthday.
Yeah.
So
understandable. Happy early birthday.
Thank you very much. But we just wanted to encourage you in your businesses also just to start thinking about 2021 if you haven't already. Our planning officially starts next week, actually, for 2021.
Good. You guys are on it. You got a good plan, a good system together for your business.
Well, that system is being tweaked at all times.
Yeah, you can't write it in pen, can you?
No, absolutely not.
Yep.
And it doesn't matter, even if you're brand new to the housing provider, the real estate world, or if you're a novice, just having some plans and knowing, especially right now, to be flexible is to be open really to, whatever is going to change in the next month. And we have an election, right? The election in November, which is going to be really big.
Yeah, it's interesting because a lot of mail-in votes are going to be a big part of it, right?
It sounds like it.
Yep. So I don't know if I read something on something I shouldn't be, social media I shouldn't be reading, but it led me to believe that assuming there is a lot of mail-in votes, the the counting of them is going to take significantly longer, the process to probably audit them and to figure out the numbers. So I don't know if that's really true or not, but I don't think I've done a mail-in vote before. I've always been the in-person guy. I just want to go there and fill out the ballot and put it through to the Scantron machine or whatever it is.
That's right. Yeah, this is going to be interesting. And two, you might want to know, like, I mean, at least in my township, we have a new voting location, which was actually that was the case for the primary. So they have decreased the amount of locations where you go to vote, at least here. So just make sure that if they've done that in your area, that you give yourself ample amount of time if you're going to vote in person. The line for the primary was insane. So
really,
yes.
How long was it?
It was so I am ashamed to say that I did not vote in the primary because the line looked like I was probably going to wait 45 minutes to an hour.
Holy cow. That's a long line. And there's probably no good time to go there, right?
Unless you're there first thing.
That's true.
I would say. So just make sure, do a little bit of planning on your part, especially if you vote, to make sure you know where to go, or if you're going to vote mail-in, certainly do that as well. But we have lots of changes this year.
I know. We've seen a lot, and we may not have seen everything yet. Hopefully we're towards the end of all this stuff that's been weighing us down, but we'll see. Only time will tell. As I tell people, I don't have a crystal ball, but I do have a rear view mirror. So we just look back and we see what we've gone through and how we've changed and adapted. And really adapted is the best word. It's like you just deal with what's in front of you and you just change your business around it for the better. And most importantly, you got to help out. And I think helping out our borrowers and our tenants and just being understanding of the person that is living in the dwelling. It is an investment for us that we're dealing with rentals or housing or being the bank on stuff. And, it's just at the end of the day, it's like if someone has a struggle, if you help them out today, it's going to pay dividends for you in the future because they're going to remember this and be like, hey, I got my get out of jail free card or whatnot, or I got help from such and such, or I got forgiveness for such and such. And I think that's really going to help out our country. If we all can do it. I'm not saying everybody's going to do it, but if we all can do it.
Well, what are you seeing in the note space right now?
Well, I'm seeing a lot of positive signs. So the data that comes out for mortgages across the country, I get a lot of my information from Black Knight Financial Data. And so they keep a good monitor on mortgages in general. Like they're not including a lot of what I call mom and pop generated notes, seller finance notes, but it's more like the Fannie Mae, Freddie Mac, Ginnie Mae, FHA, VA paper, the institutional paper from the big banks, Bank of America, Wells Fargo, Chase, all those, JP Morgan. That data is telling us that less than 7% of all those loans are delinquent, which could mean forbearance as well, which it got up to close to 8% during this time. And now it's back down under 7%. So it's slowly getting trickled back down to what normal is. Normal is anywhere between, I'd probably say 4.5% to maybe 6% is normal throughout the year. It'll kind of ebb and flow throughout the year. And so we're seeing a lot of positive signs. So of all of these forbearances that happen because of COVID-related stuff, 25% of them at the end of their expiration period, which was the first one was 120 days, I think, have 25% of those people have paid off their mortgage or refinanced somehow to where they've paid off that debt, okay, which is a good sign. And then a few 100,000 of those were like complete payoffs, and most of them were just a renegotiation of the contract, or they were able to refi because the rates are so low right now. And the remaining folks have asked for an extension, which is going to last another, till the end of the year or another few more months. And so those folks will see of that how many stay delinquent at the end of it. So It looks like right now it's like maybe 500,000, 300 to 500,000 that are probably have just stopped paying in general of that larger set, which I think that number is controlled, is what it sounds like. It's not as high as I thought it would. Just remember in 2009, February 2010, it was almost 11% delinquency rate.
Wow.
11%. So we are not looking at today's time being like it was back then. So you talked about misinformation before. Well, here's my soapbox on misinformation about the mortgage note business. So there's a lot of people out there that are saying about how we're going to have all these foreclosures coming through and all these REOs, and be prepared for short sales, and it's right around the corner. There's going to be some more, but I don't. And I said this from day one when we started talking about COVID back in March and April, that I don't see it how it's going to be like it was back then, because it's not a financial crisis, but I do see the stuff going up. And now the signs are showing that it's tapered off. It got to where it was close to 8%, like I said, and now the default rate's coming back down. So I think there's going to be some more opportunities for people to invest in things that they normally haven't seen in a few years, as far as like non-performing loans and just having REOs. But I don't think it's going to be a rush to the courthouse and you're going to have so many properties to choose from that there's going to be leftovers. I think there's just going to be a normal supply of foreclosures.
Do you think that's going to change at all depending on the outcome of the election?
I don't know. It's silly to think that, but you can't count that out, because there are such odd things going on with politics right now that I don't want to think that, but I'm not going to be surprised if things change in a different direction because of the outcome of the election. It's so strange to think that our election has so much impact on so many different things. Like traditionally, you probably see the stock market change pretty consistently as far as it goes up and it goes back down, like around the election. Like there's some sort of period of time to where you see the dips and dives. So if people play that normalcy out, they get out maybe before the election, then get back in when it goes low right after the election, and vice versa. So I wouldn't be surprised if something happened. I don't know what the shift would be, but I guess it depends on who's going to be in the office. Maybe there'll be a different shift, but we'll see. But yeah, I guess my soapbox is that there is misinformation out there, and there will be non-performing loans. There will be foreclosures. There will be REOs. I don't think it'll be to the magnitude that it was in 2009, 10, 11, 12. But at some point there will be. It's not going to be around the corner. I think it'll be later in 2021 when we'll start seeing a lot of this stuff hit the courthouses, maybe mid 21. The banks have to have a time period to charge off loans, right, Elizabeth? In that time period, a lot of the big funds will wait because they'll get better pricing the longer they can wait when the loans are charged off. But to a certain extent, the banks get taken care of with insurance, right? Private mortgage insurance. Heard of that, right?
That's right. PMI.
That helps them out a little bit.
I'm blown away, Justin, that it's only, you mentioned around the 7, I would have thought it would have been much higher.
Yeah, because the way people are talking, right?
Absolutely.
But the data shows that we're not seeing that. My portfolio hasn't seen like a 7% hit. Most people's portfolio that we help and we get them into deals with haven't really seen a hit. But then it correlates to the type of borrower that we focus on. We focus on the borrowers that are really strong and are really adamant about hitting their marks with their payments and stuff. So you can see with pay history, like I preach all the time to people, about pay history. You can really tell a story about a deal if you look at the pay history. And some of the more riskier deals that we have, we realize why sometimes we'd have struggles with them is because of their pay history when we saw it before. But high risk, high reward, right?
That's right.
So
absolutely.
All right. Well, Elizabeth, this has been a really good episode. We got a lot of information in a short amount of time. We're definitely out of time today. And I'm Justin Bogard from Bright Path Notes. This was episode 17.
And I'm Elizabeth with Elizabeth MAORA.
All right, SUPERE. I can't wait for our next episode because we're going to have an exciting guest on. And we're going to be shooting at, well, you'll be shooting at a different location as well. So we'll leave that kind of for suspense for our next episode.
Get ready, everybody.
That's right. Don't forget to check out the video of this podcast on our YouTube channel, Bright Path Notes YouTube channel, or Elizabeth MAORA's YouTube channel. All right, until next time, guys. The Two Wealth Show is produced by Justin Bogard and Super E, sponsored by Bright Path Notes and Elizabeth MAORA. Thanks for listening and watching for our show.